We're going to be going over an option strategy that can make you a 2% return in just 1 week. So we have Bed Bath & Beyond stock right now. And as you can see, it's sitting at a price point of $3.72. Now, of course, this was a huge movement during a Monday day, and it was up almost a double during the day, and then it's down 36% after hours. So crazy stuff. And of course, Bed Bath and Beyond is not doing well. They are trying to avoid bankruptcy right now. So overall, very risky company to invest in, and a lot of people, especially Wall Street bets, are investing in this stock because they love buying stocks that are short, have high short interest, which is happening right now. But for the strategy, we are going to be trading options, and keep in mind that options prices do not reflect the current after hours stock movement. So we will probably see higher premiums on these options contracts right here. So if we go down the strike prices, this is what I'm eyeballing. We're eyeballing the 1.5 strike, and keep in mind, as I mentioned earlier, it's not taking into account the after hours movement. So this is likely going to be $4 or $5 when it opens, and even the $1 strike is going to be about maybe $2 or $3. So if we assume this is $2, um, we can sell a few contracts for $2 each, and that is going to require $10,000 of collateral. So easy $200 profit right here, as long as Bed Bath and Beyond stays above $1 per share, which it definitely could do. Very likely. Even Robinhood thinks it's a 93% chance that it will stay above $1, and that would be probably a negative 77% move that Bed Bath and Beyond needs to move downwards in order for you to start losing money. So very nice option strategy right here, especially during a time where implied volatility on many other stocks are very low. This is going to give us, especially people who are love option selling, it's going to give us a pretty good stock to sell a cash secured put on. As we can see, the stock IV rank and IV percentile, Bed Bath & Beyond stock is through the roof in terms of implied volatility, and the IV rank is one of its highest. So this is a very volatile time for Bed Bath & Beyond. So we're going to be taking advantage of that, not by buying calls, not by buying puts, but we're going to be selling options to capture the high inflated premium. Because remember, when implied volatility is high, it means that the premiums for contracts are going to be high as well. It's going to be more expensive because everyone wants it, and people think the stock is going to make a big move. But we're going to be selling options. We're going to be selling premiums. If you want to be a bit risky, you could do the 1.5 strike. That would give you a pretty good amount of premium. And as we mentioned earlier, these premiums are going to be a bit higher than it is now, just because of the after hours movement that we saw, negative 36%. So these contracts are going to go up a bit. Implied volatility is skyrocketing, and this is a good way for you to play kind of a safe option strategy. But it is going to require some collateral, but this is a 2% return in 4 days. So very nice, safe strategy.